Good afternoon, everyone, and welcome to today's webinar by the Payments Association and the Digital Pound Foundation on demystifying the digital pound. My name is Kate McKenzie. I'm a member of the content team at the Payments Association, and I've just got a couple of things before we get started. You can submit questions to today's speakers by typing your questions into the Q&A tab of the control panel. There is also a chat box, but please try and use the Q&A tab, as that will help the speakers keep track of what's coming in and make sure that they can actually get to your questions. You can send these in at any time, and the panel will address them as they come through. We do really want your input into the shape of the conversation, and we'll be making plenty of time to answer them, so please don't be shy. You can also ask questions anonymously if you don't want your name attached. If you have any technical issues, feel free to send a message through to the chat box to myself or Alana Morris from the Payments Association. I'm now going to hand over to Jana Pache, the Executive Director of Policy at the Digital Pound Foundation, who will lead today's webinar. We'll be starting with a fireside chat for about 20 minutes before we dive into the panel. Hope you enjoy, and over to you, Jana.
Thank you very much, Kate, and welcome everyone, as Kate said, to the first joint webinar between the Digital Pound Foundation and the Payments Association. Before we get started, I'll just give you a very quick introduction to the Digital Pound Foundation and our work. So we are a not-for-profit corporate membership organisation that was launched in 2021 to advocate for the introduction of what we call a well-designed digital pound in both publicly and privately issued forms in the UK, and a diverse, effective and competitive ecosystem for new forms of digital money more generally. The potential of a digital pound has garnered a lot of attention within UK payments and wider society as well, with a plethora of research, consultations, white papers and thought pieces being developed and published. However, with so much out there, it can be difficult to get to the core of the conversation and what it all means. Today, we're going to be looking at the nature of the digital pound. We'll have a fireside chat with Will Lovel, in which he will outline the digital pound, why it's necessary and how it might work in practice. We'll also look at the key opportunities presented by a digital pound in publicly issued form, so central bank digital currency, and what are the concerns of the various stakeholders involved. We'll explore how it might work in practice and the roles that different players in the ecosystem will need to take. And in general, we hope to demystify the digital pound for all of you. So we'll be starting off with the fireside chat and then moving on to a wider panel discussion. We've got a fantastic selection of panelists as well, from a range of different backgrounds and perspectives. And as Kate mentioned as well, we're very keen for this to be a hugely interactive session that is primarily driven by the questions that you have, because that is how ultimately we'll demystify the digital pound. So to get things started, Will, can you come on, please?
Good afternoon.
Hi, Will. Thanks so much for joining us. Would you like to introduce yourself?
Absolutely. So my name's Will Lovel. I am currently head of strategy and architecture, and that's in the technology function in the Bank of England. I've worked in the Bank of England for over 25 years, doing a whole range of jobs, but really in the last 5 or 6 years, very, very focused on both payments in the RTGS and wholesale space, but probably most exciting of all, digital currency and our journey towards central bank digital currency.
Thank you. Let's start off with I think a very broad question. What is the digital pound? What makes it different to other forms of money that exist at the moment? And why do we need one?
Okay, so it's a great place to start. First of all, I'd emphasize this is how we think about it in the UK. So in the UK, we are very much focused on a retail central bank digital currency. There are other types of currency, and they address different needs in different parts of the world. So nearly all of my comments, except where I qualify them, will be about what we're doing in the UK. And in the UK, we are very focused on having something that is a retail payment method, something that ordinary people can use, a digital equivalent of a banknote. And this is about ensuring that as a central bank, we can anchor confidence and safety in the monetary system. So first of all, it's giving ordinary people access to a digital pound. £10 of CBDC will be like a £10 note. As we're seeing the use of cash declining in the UK, we think it's really important to give people that option. While we're doing that, however, there's also a fantastic opportunity to promote innovation and choice and efficiency. So it's really those two main planks. It's about giving people, ordinary people spending money in the shops every day, access to a digital equivalent of the UK banknote, but also creating an ecosystem where we can give that innovation and choice.
Thanks very much, Will. And I think a question that we're frequently asked is, why do we need a digital pound in the context of, isn't the money that we use today already digital in any case? And what is the difference between a digital pound and all the other money that we have out there? How does it differentiate itself from the money in bank accounts, for example?
Sure. So this why do we need it question comes up a lot, and justifiably so. I should at this point say, yeah, we haven't taken the final decision to roll out a digital pound. That will be taken in combination with the UK Treasury and between the Bank of England. It's not a single choice there, and we're consulting on that publicly at the moment, and we can come back to the public consultation. I'm sure we will a little bit later. But to pick up this question, I think that a lot of people have will say, well, I have digital money now, I have a debit card or whatever it is, I have contactless, I can tap, I've got PayPal, and so forth. Actually, all of those mediums that you have now, be it on your mobile phone or in your debit card, those kinds of things, are a wrapper on the payment system. And what you're really doing there is moving, just get a little bit into the accounting of it, you're moving liabilities from the balance sheet of one bank to another bank. Now, there's nothing wrong with that. It works very well for most people most of the time. But what we've seen, even quite recently, with the events of, Silicon Valley Bank being a great example, is that banks are not without risk. And if you have your entire payment system effectively with people depending on that risk, being exposed to that risk, if you like, of their bank, then you have, if you like, this layer, this private sector layer between ordinary people and the central bank. And the central bank, you've got to remember, has the mission of monetary stability and financial stability. We're a public body, and that's what we're charged with. Now, the way that we've normally given people for, quite a long time, access to that safe and stable money is to print and issue banknotes. And that's been working very, very well up until a few years ago, when the electronic methods started to overtake physical currency. I think it was 2017 that crossover point happened. So we need a new way. As the way that people pay changes, that profile of risks changes, and the things that we need to do as a central bank changes. So it's actually, the thinking is being driven by that. But that's looking at it very from a sort of risk policy lens. There's also obviously a kind of product lens to this. This has got to be tractable. This has got to be usable. People have got to want to use it. And a lot of the motivation behind the public consultation we're doing is partly to get that information out there, but also to get that feedback about what people want to see, what people need. And also coming back to that, I want to give as much emphasis to the innovation and choice part of this as well, actually where that might have the most impact.
So in terms of how it all works in practice and how I get my hands on some CBDC, at the moment, if I want cash, I don't go to the central bank and ask you for some cash. I go to an ATM and withdraw it from my bank account, and putting aside, the logistics of what is actually happening in that transaction. I think, the key point there is that the commercial banks basically act as the distribution channel for cash. So what role will commercial banks and other private sector actors play in the distribution of a CBDC in the future? Because I think, often a misconception is that the issuance of a CBDC will turn central banks into basically direct banks to the public, and you are going to hire teams of thousands and thousands of people who will be opening bank accounts and doing KYC and AML and things like that. And that's not necessarily the case. So how will that kind of market infrastructure look in practice?
So we are proposing at the moment what we call a platform model. And the way that this will work is that the underlying ledger that records the transactions and records how much money everyone has got will be operated by the Bank of England. So you will have that safe and secure settlement underpinning it in the same way that we print banknotes at the moment. We will then surface that through actually a new type of entity called a payment infrastructure service provider, or PISP. Now, payment infrastructure service providers will provide people with wallets that allow them to access their CBDC and probably other features as well. It's a new type of entity. Certainly banks can and probably will opt to be PISPs, payment infrastructure service providers, but also technology companies as well. Because the important thing there is that the PISPs aren't exposed to the deposit taking and the credit risks that an ordinary bank might be. So it actually opens up a broader spectrum of people who might become involved in this ecosystem. I think the other thing as well to understand about it is it allows us to have a diverse range of types of wallets and types of products. And it's a bit of a learning from distributing physical cash as well. Certainly how we do it in the UK, of getting people to do the thing that they are good at. So I think you will, if you were to see an iPhone app that I had developed, I am actually, an application developer, it probably wouldn't be very good, because that's not what I get out of bed to do. I get out of bed to do that safe and secure settlement thing. So we will have the central bank doing the thing that we're good at. We're going to expose that through an API layer. And then we want to have a diverse ecosystem that can support different types of use cases, because different people will want to use this product in different ways, we think, and create that sort of rich experience that we're looking for, and also to drive that innovation through.
So you're creating a pretty compelling, argument there for why I, as an end user, should want to hold this CBDC. But on the other hand, could that be too compelling an argument? If I can hold, riskless digital cash, essentially, with no counterparty risk, no risk of bank runs or anything like that, that's directly issued by a central bank, and I can use that for my day-to-day transactions as well as my savings, etc. Then why do I need a bank account? What will happen to banks ultimately?
Well, there's things that banks do other than just offering current accounts, of course, largely around credit creation and offering savings accounts and offering credit and loans and those kinds of things. So CBDC certainly doesn't mean that the Bank of England is moving into any of those spaces. The point you make about bank runs is a good one. So this is really, if you have a very fast and frictionless way of withdrawing large amounts of money from a bank were it to get into trouble, doesn't this sort of increase that risk? And that's a great question, and it's had a lot of focus in a lot of jurisdictions. Actually, coming back to Silicon Valley Bank, that was a really interesting example of how in the US, where they certainly don't have a CBDC, people were still able to withdraw their funds very, very quickly. So that risk exists now, and the concern is that maybe a CBDC would increase it. The main method we're looking at to address that risk is really having holding limits, a maximum amount of CBDC that private individuals be able to hold. Be slightly different for corporates and shops and stuff like that, clearly. And then this is in the consultation as well. There are 3 numbers that we're looking at as a holding limit, £20,000 being the highest one, where we know that 95% of people could receive their pay in digital pounds and keep it for an entire month and would not breach the £20,000 limit. That goes down to about 75% with a £10,000 limit, and 33% with a £5,000 limit. So we're very much looking at it setting those limits according to how much people are paid, because again, it's focusing on making something that is there's a product that people want to use. If you put the limit really, really low, then it just becomes too much friction. That said, there's a separate question about, at the point of rollout, actually, whether we would start really, really small, which, in the same way that the contact list has, just so we can prove the technology. But in the long run, we're looking at using limits like that, and we're consulting on, this is why we have a consultation, is to get feedback on points like this, to address that risk of, fast outflow in the event of a bank run.
Got lots of questions coming in already, lots on the implementation and business models for the PISPs, and a question that I have myself: what's the difference between a PISP and a PIP or an ESIP, since those are mentioned? Let's not talk about those right now. We'll talk about them when we open up to the wider panel. I think in the few minutes that we have left on this one-to-one chat, I'd like to ask you about two things. First of all, privacy, which is foremost in everyone's minds, and secondly, public engagement with the introduction of the digital pound. So privacy, I think there is well-founded suspicion on the part of the general public, and many of us who work in this space as well, based on the implementations in some other jurisdictions, China being a notable one, that the introduction of a CBDC might be a backdoor or means for governments and central banks to control the population, to monitor their activities in more depth, and generally to do things or exert control that people don't want to have in their lives. Sure. So how is the bank addressing that through the proposed design of the CBDC?
So the first thing to say, and we've said this within the consultation document, is that neither the government nor the Bank of England will have access to the digital pound users' personal data. Okay, and we've put that in black and white. It's got it's issued by the bank and it's issued by the Treasury, because we want to be really, really clear about that. I don't want to tell you how to spend your £10 notes, and I don't want to tell you how to spend or track what you're doing with your digital money either. That said, a digital pound is not going to be anonymous, because we need to be able to identify and verify users to prevent financial crime. And I think we can all agree that that's something that's needed. And in fact, in the same way that when you use a debit card now, there is an amount of data that you hand over every time you tap that card about effectively your location, that you're sharing on the understanding that it's within a proper secure framework. We want to take it a little bit further than that, and this comes a little bit, so I'm just having a quick glance at the questions about business models, that users should be able to choose from a range of wallet services and be able to choose from a range of identification as well. Now, just to be clear about what I'm talking about here, this is very much along the model of, if you like, the supermarket loyalty card. If you have a supermarket loyalty card, you are effectively handing over a little bit more of your personal information, being the products you buy, where you buy them, when you buy them, in return generally for some sort of form of discounts. And we see there being some interesting propositions like that some people might want to go for. Other people might choose to not share that information. But the important thing about that is giving people choice and giving people the ability to vary their privacy preferences according to their needs. There's a whole bunch of technology questions that sit behind that as well, that maybe some of the questions will get into. It also gives me an opportunity to just pump the technology working paper that we published alongside our consultation, which goes into some of our thinking on that in more depth as well.
Thanks. And finally, in terms of engagement with not only the consultation, I know the consultation has been around since the 7th of February, as just a date I know off the top of my head, obviously. But for people who are not necessarily coming from a financial or payments background, it's may not be particularly explanatory in what's being introduced. And so we've got a great question on how are you helping the public to understand this? There's been little media coverage, which is not necessarily your problem, Will, but the public, may be largely unaware of how their money, the nature of the money they use may change. And our questionnaire says there's been no open public discourse despite the consultation ending on the 30th of June. So yes, how are you planning to engage with the public? And I think here, when we say the public, it's also not just the payments community, the financial services community, it's the people who will be using this every day.
Sure. I mean, it's a journey. It's the first thing to say. So I'll talk a little bit about the journey to publishing the consultation and then what we've learned since February, and then but first where we go from here. So at the end of this consultation, as with every consultation, we'll kind of read and digest the results of it, and that there will be some sort of summary publication that comes out of that. We're also then going into a 2-year period of doing more development, more design work and more planning work to then look to actually take a final decision about whether we're rolling this out or not, because that decision still hasn't been taken yet. And that will come in around about 2 years. What I would say is, I first started talking about CBDC on webinar calls and gosh, pre-pandemic in person as well, quite a few years ago. And everyone was just, what on earth is this? What are you talking about? I now come to events like this one, where I'm getting a lot more specific questions. I think interested communities have now heard about this and are starting to take an interest. What we need to do now, off the back of the consultation, is actually open that up even further, which is quite new territory for us. I mean, there are certain aspects of public communication. I think we might have made an interest rate announcement today that's gone fairly far and wide fairly quickly, and also things like information about banknotes. We managed to get that out. We're going to have to learn some of the lessons of that, getting the information out to a much wider public. But even over that journey from sort of 2019 till now, I've found more people are turning up, more well-informed, asking much more specific questions about privacy and such like. No one was asking about that 3 or 4 years ago. Now that comes up every single time, and rightly so. So what I'm seeing is it's as we kind of grow that level of understanding, and through events like this, hopefully getting to larger events and larger media engagement, just getting the message out there, because it's as much about being able to tell the story and explain, particularly on things like, that point about neither the bank or the government will have access to your private data. Actually having that in print and being able to go around and say that was such an advantage for people like me, because we can start to draw the distinction about what we're doing in the UK and how that differs from what might be happening elsewhere. Because I think a lot of people hear about CBDC and sort of hear about something that's happening in another country or another jurisdiction and assume that they will all be the same, and that's really not the case.
Thanks so much, Will. We've got even more questions coming in, which is absolutely fantastic. I'm now going to ask the remainder of our panel, Brunello, Kuba, and Martin, to put your videos on and unmute yourselves and join the panel. And I can't see you, so if you give a quick hi when you join, know that you're here.
Hello.
Hello. Brunello, Martin, are you there?
Hello. Yes, Martin here. Yeah.
Amazing. Okay, thank you. So let's start off with a round of introductions, and we'll then start tackling some of the questions head on. Brunello, could you please introduce yourself? And I also ask that each of you, aside from a quick introduction, also gives a very brief summary of your interest in this space, why you're interested in CBDC and why you think it's important. So Brunello.
So Brunello Rosa, CEO and Head of Research at Rosa & Rubini Associate. Also, I hold a number of academic positions, including visiting professor in several academic institutions, both in the UK and in Italy, including London School of Economics, City University, and Bocconi University. I'm interested in CBDCs from various angles. Clearly, the interplay with monetary policy, the potential impact on financial stability. And I'm particularly intrigued by the geopolitical motivations behind the introduction of CBDCs.
Thanks, Brunello. Kuba, can you go next, please?
Yes, very happy to, Jana. Hi, everyone. My name's Kuba. I'm part of the founding team of Modular and currently responsible for our strategy. As part of that, I look into the future and into concepts such as digital assets and CBDCs. And my personal background is I've been in payments for 10 years and I've specialized in building new payments products and platforms as part of my career. Just briefly, in terms of Modular, we are a specialist in providing and allowing businesses to embed payments within the software products, core operations, and in launching new financial propositions. And as a consequence, we're very interested in the concept of CBDC and the ability for it to fuel and drive new methods, ways of exchanging value between consumers, businesses, and participants in the ecosystem, hence our involvement and engagement on top.
Thanks, Kuba. And last but not least, Martin.
Hi, I'm Martin Hargreaves. I'm Chief Product Officer at Quant. Quant's a London-based startup, going about 5 years, in the area of blockchain regulated stablecoins, CBDC. My background before that was at Vocalink and MasterCard, so I've been in payments 16 years now and been interested in CBDC since I heard the first mention in around 2017, I think. Quant most recently was the infrastructure provider for Project Roslyn, so we've been quite close to this project and very excited by it.
Thank you, Martin. Oh, sorry. Yes, thank you, Martin. Thank you to all of you for that. I think, given the nature of the questions, I've just been trying to very quickly mentally sort them into buckets. And I want to start from the top and maybe go down. So there's a general question, I think, around kind of the big scale stuff and how this fits into the international picture. There's then perhaps what this means from a financial system perspective. So there's a lot of questions around the role of banks and credit creation and things like that, and we can try and plow through some of those. And then PIPs and ESIPs and PISPs and the distinction between them and the various business models and incentives and things like that. And then perhaps towards the end, we might be able to tackle some of the questions around technology choice. And I think that's roughly where the questions are falling at the moment. But I really want to give Brunello an opportunity to speak on kind of the context, the wider geopolitical context for the introduction of CBDC, because I think Will has given us some excellent reasons why, from a UK domestic payment systems perspective and a UK financial system and stability perspective, we might want to introduce CBDC. But there is also a wider cross-jurisdictional global context as well. So Brunello, would you like to talk a little bit about that and about why in the context of other developments in the rest of the world, we should be thinking about CBDC?
Sure, thank you very much. Yeah, this is one area that I've been investigating for a long time. I presented this on this subject also at the recent G7 meeting organized by the Bundesbank and the German presidency. The issue is, of course, on everybody's mind because China has been the first country to issue its own CBDC, the ECNY. It was effectively rolled out at the Winter Olympics in Beijing in February 2022. China has been working on this issue for several years. They started in 2014 with around 1,000 people on the project. And clearly there have been some domestic goals, such as reacquiring some control on the transactions that were happening mostly on private sector channels, such as Alipay and WeChat Pay. Clearly, that was one of the motivation, but then also was one of the potential ways of fostering the internationalization of the renminbi, something that has not been able to do for the last few years. CBDC offered that opportunity, and as long as China remains the only country that with a viable and in fact existing CBDC, it will have kind of, I would say, an open horizon for quite some time. I understand that there are lots of technical difficulties and also legal to some extent administrative difficulties that needs to be addressed in order to roll out the CBDC. And so time is absolutely understood, but the push for going faster, I think, still needs to be made. The European Central Bank is finishing now its investigation phase and is about to begin an implementation phase of about 3 years. The Bank of England might not be much faster than that. That means that they're talking about the second half of this decade. That means that, again, for several years, the Chinese CBDC will be the only one among the major jurisdictions out there. What's the risk? Clearly, China is able to make comprehensive offers along the countries of the BRI, the Belt and Road Initiative, in which they offer to build infrastructure of all sorts, road, bridges, ports, and whatever not, but also payment system infrastructure. Not just in the form that we have seen recently that came to the fore, SIPS, the cross-border international payment system that was, for example, offered to Russia when the Russian banks were kicked out of SWIFT. But this is the basic and the foundation, but together with that kind of infrastructure, they can offer the infrastructure for CBDCs. And once that infrastructure has been put in place, not just in China, but in countries, as I say, along the BRI, say in Eastern Africa, in Southeast Asia, in Eastern Europe, and so on and so forth, in the Middle East, it's going to be extremely difficult for anyone else to go there with a different CBDC and say, oh, I'm going to make a counter offer. It's too late. Once the infrastructure is built, it will remain in place for the foreseeable future. And therefore, there's an international race in issuing CBDCs. Being, in my opinion, being second in this race means losing. Not everything, how can I say, is lost if we arrive a bit late, but not too late, because, as I said, lots will be achieved by China in the next 3-4 years when the major jurisdiction, meaning the US, the Eurozone, the UK, and Japan will not be able to offer a CBDC. So again, not from a positive, but rather a normative perspective, if I may, my invitation is to go as fast as possible, rolling out as soon as possible, potentially some of the questions around CBDC, and we see how many of them are out there, might remain unanswered at the beginning, and we can make it better as we go along. But it's very, very important that we do this quite quickly.
Thanks, Brunello. Next batch of questions I'm going to go through are really, I think, around adoption. And there's some observations of where, retail CBDCs have been introduced in other jurisdictions and they've not particularly been very popular. So the e-naira, for example, in Nigeria has not been very successful. This audience member says the e-rupee in pilot mode in India probably didn't get the response the Indian Central Bank was hoping. One reason might be that they were targeting the market where people already had multiple options, or the use cases might not have been compelling enough. Are we looking in the UK at new use cases like offline transactions, or at markets where people don't have access to common digital payments to launch a digital pound? I think that's also linked to another question in public have shown little interest in CBDC, even in China, for example, and then also someone asking, credit cards weren't very popular when they were first introduced. What steps will the Bank of England be taking to sort of ensure that a CBDC is actually practically adopted? And I think there's aspects of that question that can probably be directed to a number of you. Would be great to hear what you have to say, Will, but I think thoughts from Martin and Kuba as well on adoption would be really great, given that your companies are obviously looking at what can be done with the CBDC in the future. But Will, please go first.
Sure. I mean, there's a couple of things in there. First of all, as alluding to something I was talking about at the beginning, CBDCs are addressing different problems in different jurisdictions. So in some places, like, for example, Sand Dollar in the Bahamas, they're trying to tackle a couple of things. Number one, the level of the unbanked adult population, and number two, the difficulties of distributing physical cash over a large sort of island population. You know, those are quite specific problems that we don't have in the UK, and probably similar elsewhere. So there's something to bear in mind about that. And then, as you know, someone was making the point about a credit card, and I think actually faster payments and contactless in the UK are really good examples of technologies that had very slow adoption at first and then had a takeoff. And there's quite a phenomenon in payments that everyone expects adoption to be linear, and over time, and it never is. It's always an overestimate in the short term. So people go, well, this isn't working, no one likes it, and then an underestimate in the long term, because when it takes off, it really takes off. So I would expect that, given that we're launching into the same market effectively, that a British CBDC will follow a similar sort of pattern.
Thank you. And Martin, Cuba, do either of you have anything to add to that in terms of what do you see as necessary for adoption?
Hitting use cases that are not well served by current money mostly, and in the work we've done so far, that's primarily around programmability and automation of what consumers can do with their money. So we've over the last few years, we've had like the home automation phenomenon come in, where you can, you know, your lights can come on when you arrive. There's lots and that's sort of the model for bank accounts in the future. So we've looked at various different kinds of use cases where, I don't know, you've got kids at university, you want to make sure they don't run out of money going to their overdraft. So that's something you can automate. You are buying something from someone, it's being sent to you, they want to know they get paid, you want to know that the goods are there. You can create specific types of locks for that. You can have your shipper act as an intermediary, make sure that happens, de-risking transactions that are quite risky. So there's some of these are edge cases in some markets, some of them are big in other markets, and they're all being tested at the moment. I think that's why this period of experimentation is so important, to identify what are going to be the key differentiating use cases for money in general, as well as CBDC in the future. So, you know, where do we need to go from here for the next 20 years?
Cuba.
Yes, no, thank you, Jana. I fully agree with everything William and Martin were saying. I think what's useful for us to think in context of the UK is the time frame on which we're working to here. So the bank has been very clear in terms of the, I guess, goals for implementation timelines. And I think what's really positive is the bank's been very purposeful in saying that they're intending to move forward with this, in terms of perhaps not announcing it as a decision, but in terms of the intention to do so, and taking steps forward and give an indication of the timeframe the bank is thinking, which is 2030. So we're talking about an ecosystem in 5 to 7 years' time as well. So I think that's very important to bear in mind, in terms of, we're not talking about introducing a form of digital payment that's central bank issued today. We're talking about an ecosystem in 5 to 7 years' time, where the speed of digital change that's taking place in our daily lives, both as consumers and businesses, is only accelerating. So it's very difficult to forecast and predict the exact nature of the ecosystems that will exist, the level of propensity for consumers to use digital forms of payment that are different to what's available today. However, we know that that's the only direction things are going, and coupled with the focus that the bank has in terms of a digital form of payment that fills the same niche as cash, I think that gives us a kind of a strong indication of the kind of infrastructure we'll be looking to introduce, and where we'll be looking to digitize the last mile of the payments infrastructure in terms of what people do, and the kind of activities that they engage with in terms of cash payments. So I think it gives us kind of a roadmap to aim for, and I think the purposeful nature with which we're approaching it in the UK, I think, is really, really positive. I think, perhaps to Martin's point, it'd be fantastic now to build momentum into exploring, defining because we all know introducing infrastructure in payments is hard, and there's a lot to think about and do. And if anything, I think some of the early experimentations around CBDCs and other markets just prove that in terms of the consideration that needs to be given. So that would be my comment in terms of uses and application, and bearing in mind that would be probably designing for a very different environment than we are in today.
Thanks, Kuba. And this was a question I was going to perhaps get onto a bit later, but I think you've led into it nicely, which is what do you both I think both yourself and Martin see as critical from the perspectives of what you're doing and your companies are doing in terms of how the bank can support firms in this journey to adoption? So what kind of infrastructure would you like to see the bank providing in terms of sandboxes, or working, or how would you like to see the bank working with the private sector on exploring certain concepts? I know, you know, to be fair, and maybe Will can talk to this a little bit as well, the bank has been engaged with various private firms on exploration of various areas. There's also the Project Rosalind work that's been undertaken, which is not being done by the Bank of England, but the Bank for International Settlements and its innovation hub in London. And there is a lot of stuff going on between the private and public sector in terms of exploring the road to adoption. But what's going to be really useful and critical for you guys to see and work with the bank on over the next few years? Either of you go first.
I answered first last time, so I was waiting for Kuba, sorry. So I think I'd say at the outset, I mean, what the bank's doing at the moment is great, right? So the bank was quite heavily involved in Project Rosalind. There's a lot of private companies that were involved in that. And I mean, the results speak for themselves. It came out last week. Those kinds of projects work really well. I think that as we get more into the experimentation period, what's really helpful, I think, for some of these experiments is a kind of what if type thing around policy decisions. So as part of this design, you run up against policy questions quite a lot, and then you have to go, yeah, could be this, and kind of try and accommodate all potential scenarios. It would be quite nice to do specific experiments on a what if policy went this way, what if policy went that way as a specific experiment, because I think that can drive the technology implementation down some really interesting paths without having to hedge quite so much around the edge. You could then do another experiment for the opposite decision on the same policy, but I think the outcome of that sort of stuff would be really interesting over the next couple of years.
Thank you. Kuba.
And so we're very, I guess, excited to hear the outcomes of the consultations. I think it's been fantastic that the bank embarked on a very broad listening exercise. I guess I would characterize it in terms of engaging with industry through the roundtables, which was highly commendable through the number of sessions William and the team have probably had to participate. And I'm sure there's a whole wealth of data gathered, and what we would love to see is the build of momentum on the back of that. So continuous engagement and early insight in terms of what the bank has found through the consultation process, and start collaborating now, or as soon as practical, in terms of next steps, where we can start acting on some of the things the bank has found or might need to consider on the back of the feedback, and really actively start setting up the relevant working groups, participate now, less in perhaps listening, but more in a dialogue in terms of how could certain things be designed, and that's the kind of next step and sort of activities we're looking forward to taking part in. And I think the concept of the FMI sandboxes is a fantastic opportunity to leverage in the UK to drive into specific topical experimentation, whether that's on infrastructure points, in terms of or concepts such as privacy, applications and usage. So there's lots of things to get into. So the earlier we're starting on that journey in the UK, I think the fundamentally better design CBDC will end up with. So I think that's definitely the space we're in.
Thanks, Kuba. Will, is there any comments you'd like to make on any of that?
I've just been going through the Q&A. There are just so many things.
There's
here.
so many. We have to have we have to have part 2 to go through this, because I think we can answer maybe about 4 or 5 more if I scrunch them together. But yes, any quick comments on you know, how you're going to work with, how the bank will work with the private sector? Yeah.
So we've got some. We're going into what we're calling, certainly from a technology perspective, an experiment phase. Where we're going to look to work with a whole range of actually quite different companies on different aspects, because we need to learn more about how these technologies might work and how they might fit together. So that's revving up now, and we're involved in recruitment now, and we'll start to see a lot more of that come, I think, in the second half of the year. And yeah, we have the FMI sandbox as well, which is actually much more wholesale market infrastructure focused. But it's been a real shift that I've seen in the bank in the time that I've been there, about a bias towards actually more hands-on practical work and what we can learn from doing that. Something that, you know, really 10 years ago that was never thought about. We're much more moved towards that, which is a positive place to be.
Great. Okay, I'm going to start on some of the questions around kind of business models and things like that. I think we've got a couple on banks. So with regards to credit creation, does that mean fractional reserve banking will remain? How will the bank actually create money? What's it backed by? Are there limits on how much the bank can produce? I think perhaps we'll put some of those monetary policy questions aside, but there's a useful question there around the ongoing role of commercial banks in the digital pound ecosystem. How will the bank incentivize banks to join the digital pound ecosystem, given that the digital pound is likely to erode the deposit space and existing payments revenue? So I think that's around, you know, what are the commercial incentives, not only for banks perhaps, but getting onto the other types of payments interface providers. And perhaps you could also explain the difference between PISPs and PIPs versus ESIPs as well. And Brunello, I'd love you to come in on some of these questions as well, from more of a kind of policy and perspective, and, you know, where you see some of the commercial trends lying.
Yeah.
But Will, if you could.
Shall I go first, shall I? Yeah, okay. So, I mean, the actual impact of a CBDC on commercial bank deposits is yet to be seen. So there's a lot of research, there's a lot of theory about it, and then there will be some practice, and we'll see what it is. And I think we should also remember that the model that commercial banks have operated, if you look at it over 100-year time span, has changed a tremendous amount. And this might represent, you know, another change again. But certainly, like I said before, credit creation and savings products and all those things are very much not being moved into CBDC. This is about having a payment medium as well. So I think, you know, it will have an impact definitely on the models that commercial banks use, but it doesn't actually strip out everything that they do. And that part of creating credit and offering savings products and loans will very much stay within that part of the commercial sector.
Thank you. And again, I think for commercial incentives for the, you know, the various players in this ecosystem, what will motivate them to want to come out? So I can perhaps see why, you know, an innovator might see the CBDC as a platform for innovation and actually want to build something on it. But if I'm a commercial bank, you know, unless perhaps there's a mandate for me to provide, you know, wallets alongside accounts, and also to, you know, convert on demand and at par between deposits and CBDC, I might not actually see much value in doing it. What are your thoughts on that, Brunello? And
yeah,
centers?
it's a very important question. So in the platform model that William described, or two-tier systems, as somebody has called it, the ultimate issuer of the CBDC is, of course, the central bank. But the central bank doesn't want to have several millions of people as counterparties. In a country like the UK, we are talking about 60, 65 million, way too many. for a central bank to handle. I say as a former Bank of England official myself. So it's not going to be the central bank that manages all the process. It's going to be the commercial banks. Okay, they will do the KYC, AML, the counter terrorism financing checks, and all that. Let me use this expression: dirty work that goes with the issuance of wallets and making sure that they are managed and functional and so on and so forth. So commercial banks will be asked to do that. Will they do it for free? No. They will want something in return. And what is it that they want in return? First of all, the CBDC will not have, should not compete with some of the commercial bank money that can be issued. For example, the central bank doesn't want CBDCs to be programmable to begin with. So effectively, some of the features that you might in fact have with the CBDC will not be enabled. And this is to allow commercial banks to exploit some of these benefits for their own benefits. But I think the biggest price that commercial banks are looking at is the possibility of issuing their own digital assets. And this will be in the form, I think, of stable coins. If it's not stable coins, it's going to be tokenized deposits. There are slight differences between these two we can discuss, but the point is commercial banks will want to be able to use to the full extent the ability of issuing digital assets for themselves. And then there will be a healthy competitions among banks on who's able to offer the best form of money. What smart contracts are included? What services can be attached to any transaction and form of money? Clearly, there would be a challenge, what the BIS called the challenge of the singleness of money. So making sure that £1 is £1 in every bank, is £1 in any part of the country. That is an issue that needs to be addressed. Somehow tokenized deposits have less of this issue than stable coins, but I think the more profitable part for commercial banks will be the issuance of stable coins. And just to finish off, Canliff, in a recent speech about the advancements about all these things, I think Canliff is, of course, MPC board member in charge of financial stability, the board governor, and in charge of the CBDC effort at the Bank of England, has spoken at length about the commercial bank issuing stable coins. So that means, and actually the Bank of England has already asked to, has been already asked by the Treasury to somehow, let me use this expression, bail out troubled stable coins if that ever come to fruition in the future. So there's a full line of commercial opportunities for commercial banks that may want to use them.
Thanks, Brunello. And time is just flying. Before I get on to closing remarks, I want to ask you all a question about inclusion, both financial inclusion and digital inclusion, which and maybe bring together a few of the other themes in the Q&A. So how is the Bank of England considering, I think, William, the question would be, how is the Bank of England considering, both financial and digital inclusion in the design of a CBDC? And then more broadly, I'll open up to everyone else to talk about how they see some of the challenges around financial and digital inclusion and how they might be addressed through, for example, support for offline payments and things like that. But first, Will.
Yeah, so offline payments, let's start there. That's something that we've been actively investigating for those who haven't come across it. This is the ability to be able to transact to CBDC when you don't have an internet connection for whatever reason. And we've been doing quite a lot of collaboration with the Central Bank of Canada on that as well, because geographically that's a big question for them. So we're looking at the technologies that might enable that. We're also looking at form factors. So although typically when we're talking about CBDCs, people talk about a wallet being on a smartphone, also looking at what smart cards might look like, so that we can have different ways for different people with different needs to use it. But it's very much on the agenda.
Thanks. Kuba, any thoughts on financial and digital inclusion challenges and how these can be addressed?
Not much beyond what William mentioned. I think in order to facilitate inclusion, it's hard to see how you could achieve that without offline transactions with a CBDC, especially in context of how cash is used in retail scenarios. There's clearly still a generational journey in terms of introducing the infrastructure, let alone convincing people that's the right way to transact, to fully move away from the ability to facilitate payments purely within an online environment. And so it's difficult to see that if one of the main goals of a retail like CBDC, like in the UK, is to achieve that inclusion and that ubiquity in terms of ability to transact with a digital token, then that becomes kind of a fundamental design point, I think, to address early. So and something I think is important in terms of its ability to be adopted in a reasonable horizon, I think.
Great. Martin, thoughts?
I haven't got much apart from that, other than it will start to get really interesting when we start to see some of the ATM manufacturers also involved in their offline trials, because for those that don't have computers and phones, that's likely to be the interface.
Brunello, any thoughts on that topic?
On financial inclusion.
Or digital inclusion?
Yeah, I mean, it's like everything. We know that there's a digital divide, and like in every new instruments, it can increase or decrease digital divide. In this occasion, we believe it may reduce the digital divide by being able to provide some services also to the unbanked people. On this, I have some my own thoughts. Not sure whether this will happen. The idea is that it's easier to give a mobile phone to somebody that we are not talking about. Let's talk about advanced economies, but the more developing economies, the rural economies, and so on. But it's easier to reach people with a mobile network than with the banking system. True, maybe true, but I think way more efforts need to be made in terms of financial inclusion. And if I may, as a professor at university, education is super important. We need to make people understand what's going on. It's as we know, and we see from the questions, and some of them really brilliant questions that have been asked, how complicated this subject is, how complicated for the expertise, or even for the very well-educated people. Imagine for those people who have very little access to information systems and so on. So there will be lots of explanation that will need to be made. You spoke about the outreach program of the Bank of England. I'm sure there will be plenty of programs that will be rolled out up and down the country, in this country, but everywhere in the world. Well, this will be happening because we will need to explain very carefully people what's this innovation about and how not to feel excluded or be brought into something that seems simple, but then has its own drawbacks and difficult to control.
Thank you. We've got 2 minutes left. I'm really sorry that we haven't been able to get to all of the questions. We'll have a chat and see if there's, opportunity to address any of them in some other way. Just as a quick 30-second round of questions, I've got one question for the panelists and one for Will. So panelists, in 30 seconds, what is for you the top priority that the Bank of England should have in mind when considering adoption of a digital pound? Kuba, please go first.
Oh, I was afraid you might start there. This might not come as a surprise as an infrastructure payments business. I think infrastructure, and considering how this is implemented early in the context of these cases that the bank thinks the CBDC will find most of its adoption in. I think those questions are definitely critical for the industry to be able to really then engage and help the bank design a really useful CBDC.
Thank you. 30 seconds, go Martin.
I think in the next 2 years, finding the key use cases and education. Agree with Brunello, education.
Awesome. And Brunello, your 30 seconds.
Having said quite already a few things, I would say of the things we haven't touched so far, being very, very careful with the interaction between the introduction of CBDCs and monetary policy implementation. I myself was in that directorate of the Bank of England. I know how complicated implementation is. After the decision, it needs to be implemented, complicated, and of course, financial stability. William did a great job in exemplifying how things can go pear-shaped in the US with the Silicon Valley Bank. Those things can happen in any jurisdiction. The memories of the global financial crisis and the banking crisis we had in the UK are unfortunately still fresh among us. So.
Just at 3 o'clock. Finally, for Will, obviously, I'm not going to ask the same question, but lots of people want to engage. You've seen that from the Q&A. They're very passionate about it, not just companies, but also individuals. What's the best way for them to engage with the bank right now?
Well, do get a consultation response in by the deadline if you have time. We've got tens of thousands in, which is unprecedented for us. Really excited about it. Very happy about that level of engagement. And then watch this space, because if there's one takeaway that I have from this is that people want more information. They want to know more. So myself and my colleagues obviously got to get out and about more, even more than we have done already.
Thank you. And handing back over to Kate now.
Great, thank you. Thank you, Jana, and thank you to all our panelists, our speakers today. And thank you all for attending. I won't keep you any longer. I know we're already at 3 o'clock. Just a reminder, we will be sending a survey around shortly. So any feedback will be really helpful, as well as we will be sending a recording of this webinar within the next 24 to 48 hours. So keep an eye out for that. And yes, obviously, lots of questions here, lots that we weren't able to quite get to in the time. So I'm sure we'll work on a follow-up. So keep an eye out for that as well. But thank you very much, and we'll see you all soon.